Good morning, traders. Happy Monday. It is the 17th of April, 2017, 8:01 Chicago time, 9:01 Eastern. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The current market stance is mostly unchanged. The yen leading the pack up 42 pips or 0.46%, followed by the Russell up 0.37% or 5 points. The laggards are the US dollar and crude oil. I want to remind everyone right off the bat that today um, is a holiday in Europe. Eurex is closed, so are the banks in the UK, and so on. And for that reason, our volume is very, very low in the overnight session. Currently, the S&P minis, the volume's at 97,936 contracts. By now, normally we're around 140,000 or higher. So this is the kind of day we're coming into. Just be aware that that's the situation. U.S. markets are open as normal. The trading session started yesterday with the futures open at 5 Central, 6 Eastern, and it just proceeds as normal. As far as news, not much to report this morning. We had a number this morning that's a low tier number. The U.S. April Empire Manufacturing came in at 5.2 versus 15.0. New orders disappointed at 7 versus 21.3. Other than that, there's some stuff going around with geopolitics again. South Korea acting President Hwang says agreed with U.S. to tighten global network pressure on North Korea. So North Korea is starting to take center stage more and more. There's some numbers out of China. GDP came in at 6.9 versus 6.8. This is the fastest growth since the third quarter of 2015. And retail sales came in at 10.9 versus 9.7. Industrial production came in at 7.6 versus 6.3, highest since December of 2014. Some strong numbers out of China, um, and that's that. Since it's the beginning of the week, I want to make sure we are aware of what's on deck. Again, today's Easter Monday in Europe. And the only number remaining in the U.S. To be released here is well, there are a couple numbers, but the key one is the 10 o'clock Eastern NAHB Housing Market Index, expecting 70 for April. And then at 4 o'clock, right at the cash market close, we get total net tick flows for February and net long-term tick flows. That is not a market mover generally. Looking at the rest of the week, tomorrow, we're going to get U.S. housing starts, building permits, and industrial production, capacity utilization. We get Fed's George speaking Wednesday. We get European CPI and trade balance, U.S. Beige Book, and Fed's Rosengren speaking. Thursday, we get German PPI, European consumer output, construction output, I guess, consumer confidence, U.S. Philly Fed leading index on Thursday, and then Friday has the most action in it. The German, European, and U.S. manufacturing PMI, services PMI, European current account, UK retail sales, U.S. home sales, and Fed's Kashkari. Most of the week's releases are low tier numbers. There's nothing here that says, perk up. This is a mover. So unless there is some significant there's some significant news, which we're always ready for. I'm not seeing much of the calendar driving the market going forward this week. From the perspective of what we've done versus what we expected, here's what we got last Thursday. Ooh, this is a blank screen. Here we go. Here's what we got last Tuesday. Um, the expectation last Tuesday, given the impulse move and flag into Tuesday and Wednesday. The expectation is for the market to make an attempt higher. I expected it to find resistance around 2341, 2341.50, and then to rotate down, and the target would be around the 2328 area. I also expected it to come back, to attempt to come back into the range, which did not happen. That's the primary hypothesis. The secondary hypothesis, which did not work out at all, is that we open out of range, an open auction out of range, push lower than the last 2 days of balance, find a base, and then make an attempt, and then start to make an attempt at a higher low for a return back into balance up back to 2341. So again, this is the hypo that worked out. Um, what is going on here? This is the hypo that worked out. Here's a look at it. So again, open auction and then an immediate push responsive up into the range, looking for to test the point of control of that area thereabouts, consolidate, and then I'm looking for it to roll over. And the key move of the day is down with a potential for a move up on the close or sideways. Here's what we actually got. There are some key things that happened on Friday that we need to take into account. There's the open auction. Here's the open auction. You can see the opening swing was 37 and a quarter, 34, and then the market pushes up. The point of control that I was referring to is right here, but this pushed all the way up to value high. This is value high, the gray area right here. Pushed all the way up to value high to the tick. We had a one tick failed auction here. Didn't seem very aggressive when I look at the move down versus delta. Didn't seem to have very much in it in the way of a failed auction. Failed auctions generally show a one tick push and an immediate move or drive in the opposite direction. We didn't get that. It lingered up there, put in a double top, and then off she goes, off to the races. And we pushed down into 23.30, and then we ultimately get 23.26 and 23.24. So this is hypo 1 all the way. It did extend up a little farther than I expected. I expected around 41, 41.50. It went to 45, and it extended lower than I expected. So two things to note. We do have a break of the IB high with this one tick failed auction, and then we have the break of the IB low. The IB is the yellow line, or the initial balance. The initial balance is the first hour trading. For first hour's trading is range, basically high and low. And then what the market did is it closed in the lower quartile of the day, or the lower 25%. The profile shows that the point of control did not move from where it was at 23.43. So we have market action that did not balance enough to shift the point of control down. I would have expected it to shift down here and then to shift down here for a true neutral extreme day. This is still neutral extreme, but the fact that the point of control remained up here with volume, with this volume exceeding the rest of the volume in the range, makes for an interesting argument for a pop up at some point this week. However, we did finish neutral, and then to take you back just as part of our review, and I'm going to do my best to keep this as short as possible. Here's what we've got on a weekly basis. So the first thing we want to be aware of is that we had a neutral extreme Thursday. The market did push lower out of balance. The next thing we want to talk about is, in fact, this is not the best chart to show it. This is the daily bar chart here. This is the lowest close at 23.2750, 23.2750 on Thursday. This is the lowest close we've had since October 13th. February 13th. Okay, so this is the lowest daily close since February 13th, and then this is also the lowest weekly close since the week ending February 10th. So what this has done is it has consolidated down here. Hopefully you can see the yellow. The market has pushed in an impulse all the way up, has pulled back, has put in a lower high, and is starting to make lower lows. Okay, so here we're starting to make lower lows. The expectation, because we started to dip into this low volume range, I hope you can see this yellow here. Because we started to dip in this into this low volume node here, this low volume zone, as you can see here on the composite, the expectation is it's likely to push to the other side to 2293.50 is the next level of support. Potentially, that is January's high, and that's the way things look. Um, that's the way things look right now. So uh, it's important to see where we're headed. We've been in balance for a little bit. Here's the overnight session. The overnight session opened pretty close to where we finished last week on Thursday, and has gone sideways for pretty much the entire Asian session. Of course, there's no European session. Generally, we go sideways during the Asian session, and then we start to kick up a notch during the European Open, which is for the Treasuries is 1 o'clock Central. These times down here are all Central. I'm in Chicago, and then it starts to make its move away from the Asian session when Europe opens. Since Europe's not open, the market hasn't done anything until this bar right here, and it's starting to trend back up late in the day. This looks like a move to front run the market on the way up before the market opens. So right now, this changes things the way the overnight session is opening. It changes things. I expect responsive selling first thing as we come in. The other piece I wanted to go over with you, given that it's a Monday, is this profile chart. This is a weekly profile. So we had this peak day back here the week of the 27th of February. We had a lower high, lower low, then a higher high, higher low, lower high, lower low, lower high, lower low, higher high, higher low, lower high, lower low. This whole area right now makes up one big balance. One big balance, and it's starting to weaken. In my opinion, it's starting to give signs that it's not able to sustain higher prices, and it's likely to roll over. So keep an eye on that. I've been telling shorts over the last couple weeks to make sure they have their hedges on for the short side. But if we look at for example, the VIX over the last few days, the VIX has been trending up. It has moved up from the 11 handle and is has moved up to about 16, and it's consolidating at 16. It looks like it's likely to continue to push higher, which tells me that there's a high potential that participants or smart money is buying insurance, is paying up for insurance on through options on their positions. So that's a further indication potentially that we may have a further push down depending on how offsides those positions become. As far as what we're expecting for today, let's kill this. All right. So as far as what we're expecting for today, I'm expecting a very quiet open. I'm expecting a very quiet session given the European markets are closed, not expecting much news. I expect the market to attempt to push higher. The overnight high is likely to be taken out, and I'm looking for the market to be responsive and start moving towards the close, the last week's close, which is at 23.2750. So 23.2750, a potential bounce up, and then I'm looking for the market to just settle in here and just go sideways. The range is expected to collapse pretty quickly today, and I'm not expecting it to go very far. So that's what I'm looking for Hypo 1. I'm looking for the key play of the day to be on the downside. And then Hypo 2 is if we get responsive early, so we have an open auction, we get responsive early. Why am I expecting an open auction? We're trading right in the prior day's range, not on any extreme. So I expect it to be quiet. I'm looking for a responsive auction, and then for it to start to tackle this 23.34, pull back, and then just hold right up here. And this will give the market a break or a rest while it consolidates. I expect volume to remain very, very low, and that sets us up for a Tuesday trade where the market might move us out of this area. That is hypo 2. So hypo 1 is an early attempt higher and then responsive down into 23, 27.50 and then sideways. Hypo 2, look for an early move down, which I'd look to fade to go long, and an attempt at 23.34 before it goes sideways. Again, don't put too much behind your trades today, in my opinion. It's not likely to follow through very well. Okay. This is another reminder, another chance to remind you that on Wednesday at 4:30 p.m. Eastern, I've been invited to have another hour-long AMA session, Ask Me Anything session through Futures IO. The invitation or the registration for that, it's free, of course, is in the description of this video. Just click on, just go below the video and you'll see a link. Just hit it and you'll be able to register and attend. Seating is limited. I think it's limited to 500 or so. We generally fill that up. Good luck today, and I'll catch you tomorrow morning. Take care.